Hello, everyone. I want to welcome you today to How to Grow Your Wealth, starting today. It's never early enough to start, and it's never too late to start. So if you feel like you have not been paying close attention to growing your wealth, let's start today. So as you should be aware, every circumstance is different. And some things that I hear when I am working with clients is, well, my cousin said they did this, or, they got 10,000 back, and why am I only getting 900 back? So that's why it is important to understand it's going to really depend on your circumstance, what will work for you and your financial plan. So I am Katrina M. Craft. I'm an entrepreneur at heart, and I've been an entrepreneur. In 2002, I really took the dive to become a full-time entrepreneur. I started working on the side. I had a side hustle. I know a lot of people started that way. I did have a side hustle doing accounting, and in 2002, I took the dive. I have a certified public accounting firm. Also, I have a craft entertainment CFO firm, which is different from my certified public accounting. That's working with the entertainment industry. But I particularly service professional service businesses, so dentists, doctors, attorneys, consultants, coaches, and I also work with the entertainment industry and real estate. So those are my specialties. One of the biggest problems in this country, can you guess what it is? It is the most small business owners and individuals need more knowledge about growing their wealth. So today we're going to talk about that. Have you ever had tax planning and advisory services done in the past? So not just the tax prep, we're really talking about planning and advising you for what you need to do to grow your wealth, grow your business, and grow your financial status. If you haven't, it's not too late, but we're going to talk about some of those things. This session is all about wealth and growing your wealth. So there are 7 income streams of millionaires that the IRS has stated. The first one is passive income. So in passive income, you can have interest, and that's one stream of income. So interest comes from a variety of sources. Most of us know that when you have a bank account or a savings account, you may gain some type of interest. If you have loans to other people or to businesses, you can also gain interest. That is passive income. Dividend, that's the second stream of income that millionaires often have, are payments from investments and partnerships. A lot of people know about dividends, possibly from investing in the stock market. When you invest in the stock market, you purchase a piece of that company, and that company can pay you a dividend monthly, quarterly, or annually. But all stocks do not pay dividends. So you need to make sure when you're researching your stocks, and if you want dividends, you're looking for companies that will pay you dividends. And again, it can be monthly, quarterly, or annually. This is beneficial. If you're looking for dividends, qualified dividends, they are very beneficial because they are taxed as a long-term capital gains rate. So that long-term capital gains rate is a lower rate than your ordinary tax rate. When you're looking at your tax return, that's why it is important to understand the different streams of income, because all income is not taxed alike. If you have capital gains, that's one rate. And if you have your ordinary income from your business or from your W-2, that's another rate. Now let's go down to capital gains rate. When you earn from investments, when you're selling something, you would have a capital gain. So let's just talk about a rental property. When you sell that rental property, you will have a capital gain or a capital loss, depending on how your property has increased in value or decreased in value from the date that you initially purchased it. When you look at capital gains rate, it is a lower rate again than your ordinary tax rate that you would have when you were making money from your W-2 or your business. It is important to understand capital gains rate, especially when you're looking at real estate, because it may be beneficial for you to sell the property depending on what your gains are, but you also have to recapture depreciation. So I know that's very technical, but when you sell a property, not only you may have gains and losses, but you're also going to have to recapture some of the depreciation that you've had from owning the real estate. I do work with a lot of real estate investors. I'm a real estate investor. My husband and I have over 12 homes that we managed in 2 different states. And so I really like talking about real estate. I like real estate as something that you have in your portfolio as a way to build wealth. And one example would be, I'm looking at selling a property that I've had since 2005, and the house has gone up 3 times in value. So that's just one example of how real estate can really help you in your wealth accumulation. So I didn't know if
I have a question. I think that's very good and very interesting. So when you own real estate as I guess a passive income business owner, explain to me, okay, first of all, I'm thinking that you'll have to have some type of company that maybe facilitates the process of, getting the lease payments and that type of thing, especially if you have a conglomerate or a number of properties. So in terms of expenses, I guess I'd like to understand how you manage those expenses. And then I'd also like to understand the tax liability as far as that passive income and, in relation to maybe if I had a W-2 and I had, direct income from an employer.
Okay, so let's start first with managing the property. Managing the property, we started actually with property managers because we didn't think that we had the knowledge or the education or skills to manage our own property. What we found is that was not true. We took some courses, and now I'm sure you know of someone that has a course. It's just making sure you get the right course to learn what's needed, because you need to know if you need to evict tenants, what's that process? How you can collect rents, how you can charge late fees. You need to understand, like, what do you look for when you're looking for a tenant? Because we look for 3 times income. We look for no evictions in the past. We need 2 months of pay stub. So there are certain things you need to know if you are managing, that you need to take some classes and just not jump in, learn from someone who could be a mentor, or if you do have a property manager that starts the process, you can maybe have them manage your first house, you learn the ropes from them, and then you manage the subsequent homes. That's really kind of what we did. The homes that are out of state, we have property managers, and a property manager is going to charge you to manage that house, usually 10%. If you have multiple houses, they may go down to 8%, but that's 10% of the rents that they're collecting, because they're managing the collection process from the tenants. They're managing the repairs. They're really looking at the property to make sure it's in good standing. And when we're have a property from out of town, it's just difficult for us because that's not our full-time business. We do both have full-time jobs. I have a business and my husband is a W-2 worker. So we don't have the opportunity and the time to go and manage houses that are out of state. But the ones that are here in Dallas, I'm in Dallas, we do manage all of our own homes. Regarding passive income, the good thing about real estate is that you have a phantom cost or expense that's called depreciation. So even if we may have a profit in the home, because we have depreciation, which is an expense that you can take. Depreciation is basically saying the property, because of its use and wear and tear, it's gone down, and you get to deduct a line item called depreciation on your taxes. So even though we may have a profit in our pockets, when you count in depreciation, it could allow us to have a loss. We like losses, fake losses, or phantom losses from depreciation, because that reduces our overall tax burden. So real estate can be good in both of those ways, depending on how much you're receiving from your tenants, and then depreciation. So you could really have phantom losses that can offset some other income for you. The other thing about having real estate, especially in other states, if you have it in another state, then that travel is now deductible because you have to go and see your properties. So if you live in one place and maybe your family is in another state, or if you have a house in that state, then those trips, if you take airline, rental car, when you eat meals there, a lot of that can be a deduction for you. And that's another great way to leverage real estate. So we talked about interest and dividend and capital gains as a stream of income. Also, you have royalties. Another good idea, if you want to talk about royalty income, would be if you create a course. And I have a course that I'm creating. Now that could be royalty income if I were to license that product to someone else, because then it's just money coming in and I don't have to do any work on it. That could be royalty income. Also, because I work with entertainers, they receive royalty income from writing different songs, or if they're doing music for the songs, the others are using that, that's royalty income. Also, income from your business. And when I talk about income from your business, I'm not talking about you paying yourself a salary, because ordinary income from W-2 wages is also a stream of income. So you may pay yourself payroll, that's a stream of income. But what I'm talking about is a business owner, you have profits in your business that can flow to you. That's a stream of income. So millionaires have lots of streams of income, or they may just have 4 streams, but still the ability to have various ways to make money and to grow your wealth is what is important. So my wealth journey. I started my business in 2002. I partnered with a wealth strategist that was Robert Kiyosaki's wealth strategist, Rich Dad, Poor Dad. And I really wanted to learn all about wealth, strategy, tax strategies, how to save money, how to grow. And I worked with the strategists who worked with Robert Kiyosaki, the Rich Dad, Poor Dad book. What I learned is I really was able to make 6 figures really quick within 1 year working with the tax strategists and working with other business owners, because I learned a lot just being under them. Although I had an accounting degree, we are not taught a lot of times about wealth. We're not taught about creation. So I knew about counting and taking the numbers, but not about wealth. I didn't learn about real estate in school. I didn't learn about investments in school. I didn't learn about crypto in school. Those are things that I didn't learn in a formal education. And I think that we're not taught a lot of that. So that is one thing that I love to share with others. So I did work with the tax strategist, and she was my largest client, like bringing in 80%, because how we worked is I would do a piece of the work, and I was on all of the tax strategies for the high net worth, and I would write them up and correspond with the clients to make sure everything was implemented. Well, everything changed. She decided she didn't want to do that job anymore, or she didn't want to provide those services anymore. So I'm looking like, oh, wow, that's 80% of my income. What am I to do? So at that point, I knew I had to get my financial house in order, because I had just moved into a house. I had car notes. Everything was on me. I was single at the time, and I just kept spending. I kept feeling like I didn't want to change my lifestyle, and I just thought things would just change very rapidly, but it didn't. So it ended up making me I did it to myself. I ended up being in almost $100,000 worth of debt. So I knew I had to take that situation into my own hands. So I started doing a detailed budget at the beginning and end of every month. I stopped spending money, period. And that was very hard, because it taught me some lessons that I really hadn't learned as an accountant. So I was kind of like, oh, wow, how could I not know this? Just about money, finances, and self-control. So one of the biggest takeaways is dealing with debt and coming back stronger was the concept of saving. Just to save, because, and what happens is then I use that savings to invest in other things like the real estate or investing in the stock market. So I knew that just saving, say, in an investment account and getting less than 1% was not the way. But I knew that if I were to save, then there would be other opportunities that I would be able to invest in. So I do want to just mention that once you start saving and you know that you want to do it for a particular reason, you have 30,000, 50,000, 100,000. That doesn't mean that you've arrived and it's time to buy that G-Wagon. So don't spend all the money, and that 30,000, 50,000, 100 is not really a lot when you look at the business world and what you need to really grow your business and maintain your business. If you wanted to get in real estate, you have to put down sometimes 20% down for rental properties. Luckily, when I started, that's when the time of the no doc loans, or I had to put 5% down, but now it's really changed. So you have to have savings, or you have to bring in partners. Some of my mentors have told me, if you find a great deal, you'll find the money. So that's another consideration, but you have to know how to find the deals if you're looking at real estate, and be able to work with the partner. So we talked about that could be a form of income. You could be lending the money. I have a client that lends money to investors. So that's his form of passive income. He's not holding the property, but he's making money by lending to other people that do want to purchase. That's another form of millionaire stream of money. So just keep saving, invest until you have 6 months of business and personal expenses saved in cash. That's my rule that I like to give people. Saving for me meant no restaurants at the time, only physical cash to spend on groceries, no vacations, no new electronics, and no couch. I had to work hard because I had to build up my clientele again. All of that allowed me to turn around my debt in 14 months. So I was able to pay close to $100,000 off in 14 months. Now, as I mentioned, my husband and I are real estate investors with over 12 properties. We invest in cryptocurrencies, stock market. We're business owners, and we get to travel and enjoy rejuvenation time. So that's what I like to do. And also I like to garden. But keep in mind, this all started with me understanding my financial picture. So we have to understand the information. Some of the scary financial facts: about 40% of adults said if they faced with a $400 unexpected expense, they would either not be able to pay it or would do so by selling something or borrowing money. That's in 2017. So $400. We have to have something in reserve for unexpected things, especially if you are going into real estate. You never know when an air conditioner is going to break down, and you can't tell a tenant, well, you have to wait till I get money to fix it. They're not going to understand that, nor should they, because they're paying you rent. According to a recent Forbes article, 43% of student loan borrowers are not making payments. Now, we know that there's some deferral on student loans, and I know some people are like, okay, I'm going to wait until I figure out if we won't have to pay it back, but you may have to, so just plan for it. Roughly 80% of small business survive the first year. Only about half of small business survive past the 5-year mark. So if you have made it past 5 years in your business, you are the 50%. That's amazing. Again, we talk about one of the biggest problems is that small business owners and individuals, we do not understand wealth building.
Can you speak to what a successful small business looks like? Because just because I've survived 5 years, does that mean I'm healthy and I need to keep going? Or what do I need to look at in regard to my business that makes me a successful small business?
Well, I think success can be defined by each person. If you have constantly had losses over, say you've made it past 5 years and you've had just losses and you have not made a profit yet, I would really evaluate why. Like really, we're going to talk about what numbers do you look at when you're looking at your financials, what things you may need to consider you need to cut back on, and then what does it mean to really look at your balance sheet. So are people, do they understand their balance sheet? Do they understand their income statement? I think if you don't understand those items, you're not able to really evaluate and say what's successful. Also, this is something that's in the course that I talk about, is developing your KPIs. So those are your indexes that you feel like you need in your business for it to be successful for you. So it may be, I want to bring home, 4%. And it depends on each industry. Like in a course creator type industry or digital marketer industry, you need to have 30% profit. They're saying for really to look at it and for it to be profitable. So each industry is different. Like construction industry is lower than a professional service industry, because professional service is a lot of our time, is what is billed. Whereas construction, you have materials. So I think you really need to understand your industries and know what is profitable based on your industry standards.
Thank you.
According to a recent Forbes article, 33% of American adults have zero saved for retirement. The Social Security scares me. I'm just like, is there going to be money when I retire? I don't know. So I want to make sure that I have wealth accumulation and I'm saving and I'm investing and I'm really looking at what I can do to grow my wealth and not really wanting to depend on Social Security to afford the lifestyle that I'd like when I retire. So what does your current wealth picture look like? Do you know your net worth off the top of your head? And you may not even know what net worth is. We're going to go over that, but you should know that off the top of your head about what you're worth. The next question is, do you know how much liquid assets you currently own? Also, let's talk about, are you covering your expenses with the income you are bringing in each month? So do you have more expenses than you have money at the end of each month? Do you know how much debt you owe? Put down your personal debt, what you have, and your business debt. These are numbers that you should know. I would like for you all to keep that in front of you, because when you're doing goal setting, you may have goals to reduce your debt. You may have goals that you have more income than you have expenses, or to reduce your expenses, but you have to start with the number. You have to know where you are in order to plan a path to where you're going. So I want you all to just keep those numbers in mind. Let's talk about your personal net worth, because maybe you have never done a net worth statement. Generally, the accounting equation from a business perspective, so if you're a business owner, you may know this, that your assets minus your liabilities equals your equity. So the assets that you have minus your liabilities will equal the equity or the value of your business. Well, on your personal net worth statement, we look at your assets. So I ask you, what were your liquid assets? And then we're also going to look at what other type of assets do you have? Minus your debt, like what do you owe? That's going to equal your net worth. So when I ask you about your net worth, this is the equation to figure out your net worth. This is very important. A lot of times if you're getting loans, if you are a business owner, they want to see your personal net worth too. Not only your business, they want to know your personal, because they want to make sure that if your business goes down, you can still afford and have resources to pay that business debt with your personal net worth. A lot of times they're still going to ask for a personal guarantee. So that's why it is important to understand this number and to have it in front of you and to work on increasing your net worth. So let's talk about some of the assets. When we look at assets, that's a part of that equation. You're going to look at your bank accounts, your investment accounts, your 401k, your house. So the value of your house as it is now, like how much equity you have in it. The stocks, your car, your rental properties, your antiques, high value clothing, electronics, collectibles, and a boat. So these are things that are your assets. We know what debt are. We know what debts are going to be included. So if you have any type of debt, so your car, your car note, your house mortgage, if you have rental properties, what you owe on those. And then if you have any credit card debts, all of that is going to be in your debt. And then that's going to equal your net worth. So take a list and just put down all of your assets and their values. And then take another column and put your debt down. And then you'll have the difference is your net worth. So personal income statement, that's different from a net worth statement. Your income statement, as a business owner, you may be familiar with that. That's what you're bringing in, less your expenses for that certain period. Whereas net worth looks at, it's almost like your balance sheet for your business. Your personal net worth shows you what you have, your value, your net value with your assets less your debt, that's your net value. But the income statement, your personal income statement, shows what you're bringing in every month and what goes out every month. You also need to track that, because if more is going out than's coming in, then something needs to change. Either you need to reduce your expenses or bring in more income. So you need to keep track of both of those, your net worth and your monthly, quarterly, and annual income and expenses. That's a great way to also look at what's happening, so you can create a budget and prepare goals for your personal income statement. So now let's talk about the power of compound interest. When you look at compound interest, it really is important that you understand that the earlier you start, the more your interest will be able to compound.
I did have a question. You mentioned NerdWallet, but can you recommend any type of tangible tools, workbooks? I'm very hands-on and very visuals, that I could have things in front of me. And when you were talking about the columns, your assets and liabilities and so forth, that you can keep track of those things, and better stay on top of that. Do you have anything you could recommend, as far as it could be an app or anything?
Yes, there's a couple things that I would recommend as far as apps. For business owners, of course, you need an accounting software, and that would be QuickBooks. You could use Xero. Those are two that I would suggest. For tracking expenses, there's something, app called Expensify, and that could be on your phone. So that is a phone app. You take a picture of your expenses and you upload them, and you can categorize them as business or personal in the app. And it also syncs with QuickBooks. So that's why I like that one. There is, and I don't know if this one is still around, Miles IQ, Miles IQ. That is a mile tracking app. So when you get on in your car, it's running. And then when you get to your location, if it's business, you swipe a certain way, and then it tracks the business miles. So that's another app that I've found that has been very useful if you're doing a lot of business travel. I would search just net worth statement if you want to see, because there is a certain format on the net worth statement. But a lot of these things, like I'm talking about, is a part of the course that I have. It's a 6-week course, and I'll talk about that. But it gives a lot of other tools that you can utilize to help grow your wealth. All right. So another thing that I do like to talk about, because I am a tax strategist, is that taxes can be your friend. The IRS basically created the tax code to help business owners. I can't really help individuals as much unless they have real estate, they have some type of business on the side, or they have, a business where they are not working as a W-2 wage owner. The reason is your tax deductions are limited. The IRS code is not made for individuals who work and don't have any other type of, say, investments, or when we talked about these other streams of income, if you don't have those other streams of income, it's very hard to get any type of deduction. So I do want to put in tax is an important part, also because the tax rates are different. If your capital gains, as I mentioned, it's a lower tax rate than ordinary rate. So why did the IRS allow that? Well, because they want people to invest. Passive income, when I talked about how you get the phantom depreciation, why is that in place? Because they want people to invest in real estate. So when you start looking at the tax laws, you kind of understand, okay, they really want to benefit business owners. I don't know if anyone that was part of the COVID relief, if you received money. If you notice, it was for the business owners. You had the SBA loans that you can get and get 3% in delay payment. You have employee retention credit. You could get up to $5,000 per employee in 2020. And in 2021, up to $7,000 per first quarter, second quarter, and third quarter. So that's a total of $26,000 that you can get because you had employees and you kept them through during COVID. You can also get the PPP. So just because you got the PPP doesn't mean you can't get the employee retention credit. So when you start to look at some of those things, you see that it's benefiting the business owners more so than a person that is working as a W-2. So that's why I do advocate for business ownership, or get a rental property or some type of other investment where you can deduct some business expenses. So I want to talk about just tax advisory services. Tax prep is just after the fact. Basically, you give me your information and I prepare your taxes. That's not helpful. We really want to do advising. We want to do some consulting with you to look at how you can grow your wealth. Okay, so when we look at the tax advisory services, when I talk about wealth building, you can deduct certain things in certain types of streams of income. So you need to be aware of that. But you have the tax deductions, then you need to understand your legal entity structure. So with real estate, you want to hold it in a certain type of entity. I never recommend anyone holding a real estate property in a C Corp. So you need to understand that, because if you hold in a C Corp and sell, you could have detrimental consequences. So you really need to understand why it's important to do certain things in certain entity structures and how it benefits you for taxes. Also for retirement, we talk about having something for retirement because we don't know about Social Security. As a business owner, you get benefits from being into a retirement account. It's a tax deduction for you. So basically the IRS is paying you to prepare for your own retirement. You can have a deduction for 25% of your income that you net, and it's a deduction on your business tax return. So how good is that, that the IRS is saying, yes, pay yourself for retirement, save it, and you get a deduction on your tax return. So that's why I say that business ownership can be your friend when you look at tax deductions. Insurance, you also want to look at insurance, like what's the best insurance to protect you? Because if you have a business where you have people coming in and out of your space, you definitely need insurance coverage for that. But then you also may need coverage for disability for yourself, or you may need coverage for if you are disabled, that your business keeps going. So some type of business interruption insurance. So there's a disability overhead insurance that if you cannot work, that insurance kicks in and it will continue to pay your employees, pay your expenses of your business, like all of your fixed expenses that you have. So it may be for your rent, your utilities, I'm thinking your marketing, anything like that. If you have an insurance called disability overhead, it could help with any type of situation where you're disabled. So that's important to know. Also, there's different tax loopholes, like hiring your children. Hiring your children, get that deduction, and then it teaches them about budgeting. So you want to take them through the same process of how much money you're bringing in, how much is coming out. So it's a great way to teach your kids about fiscal responsibility by having them have a job, first of all, having them document their time, what they're doing, because you have to have those things in place in order to take the children as a deduction as an employee. But then you can use that money, they have it in their account, and then they start to learn how to pay for their own, supplies, their own things that they want to purchase. So that's a great way to use the loopholes for tax benefit. And then we talked about the Tax Cut and Jobs Act. That's the Employee Retention Credit, the SBA loan, which they've run out of money now. So I think it was like last month they ran out of the SBA, but the employee retention credit you may still be able to get. PPP is gone, but we still want to look at maybe you can go back a couple of years, and they did have the ability to go back several years. And if you had losses in say 2020, you could go back and report those against gains you had in your business. So you could go back, say for instance, you had a loss in 2020, and then you had a gain in 2019 of 20,000, you can offset those losses from your 2020 and go back and get a check from the IRS because you had gains in 2018 and already paid taxes on it. So that's a lot of things people are not doing that you can get real money in your pocket right now. Niche specific strategies, again, I do work with mostly professional services, real estate and entertainment, and digital professionals that do course creations and content creation. And I really cannot emphasize, work with someone that knows your niche. Just like Angela asked me, what's a successful business? It's going to depend on what your niche is, what those ratios are, and someone that really knows your niche and your industry should be able to help you create your goals. Like, I don't work in construction. I don't work in restaurants. I have worked in one restaurant, but I prefer not to work in restaurants because that's a whole nother industry that you need to know how their cost of goods are, their ratios on what's good for food spoilage. All of those type of specific things are important, and that's why you should find an accountant that works in your niche. And then new tax policies. We're still waiting on the Biden new tax policy to get passed and see what's going to happen on there, but just keeping in front of the policy so you can plan just in case it does get passed and you're able to pivot. So I'm already planning, like I know what's in the plan, and we are already talking to our clients about, okay, if this passed, how we're going to pivot. So that's important to understand that, those types of things. And that's all about tax strategies and advising. So there's 23 million plus businesses in the US that are not properly structured. So a lot of people are still solo entrepreneurs. They may be sole proprietors or they're single member LLCs. That may not be the proper structure for you, but I know that's the easiest. And I know a lot of times attorneys say LLC, but they don't tell you you can be taxed as a C Corp, a S Corp, a partnership, or a sole proprietor when you get an LLC. And it may benefit you as far as tax related to be something else other than an LLC filing as a Schedule C. So that's important to really look at what's going to be best for you. Now, when we look at the tax journey, we just talk about the different things, what's going to trigger your tax. So you want to definitely search for answers for your questions. You're going to have your savings calculator, your plans, you decide what you want to do. We help you implement those strategies, and you make sure you file quarterly your tax estimate. A lot of people don't know that you should figure out how much you're going to owe quarterly and pay in, because the IRS is a pay-as-you-go system. If you wait until when the taxes due on April 15th or March 15th, if you're a business to pay your taxes, the IRS penalizes you because you did not pay in quarterly as the pay-as-you-go system. So look at your tax return and make sure you have not been subject to estimated tax penalties, because that's a pretty hefty penalty if you're not paying in. So just because you file an extension and just because you pay by April 15th, that does not clear you from estimated tax. You need to make sure that you're looking at that and paying that in. So I want to give an example of a client, and this is using tax strategies. So a 42-year-old, she's 42 years old, and we were able to save $18,000 in taxes in the first year. And then going forward. So once we did the plan, she was able to save $18,000 the first year, and then every year going forward. So that meant that she had $1,500 extra a month. Now we talked about what do we need to do? Look at that NerdWallet and see if you were able to put in $1,500 or more a month in savings, how would your account grow? So that's why I do like to add tax strategy into wealth building, because when you do the proper strategy, it's going to bring more money to you and put that in your pocket. So she was able to save that $1,500 more a month. So think about it, without increasing her income, she didn't do anything different, without reducing her expenses. She didn't grow her company. She didn't reduce her lifestyle, but just from a tax plan. I have done a tax plan that saves a person $160,000 in 1 year. So that company was about a $4 million company. But the thing about the tax plan was there was so much that was available to that client that could be done. And I feel that a lot of people are missing deductions. I know that they are, because majority of business owners are overpaying their taxes. They're not doing tax planning. They are just going to their CPA or their tax preparer and giving them data. That's after the fact. There's no planning. That's not proactive. So you're really losing money and you're losing wealth by not doing that, doing a plan. If you bought a real estate property and it tripled, that's increased wealth. So I'm looking at something that's just giving you 6% and gaining that much money. But if you had another investment that could give you more and yield more, then it could even be higher. So what we do, we helped that particular person structure their business to maximize tax, because as I said, depends on the structure. We took forms of asset protection. So asset protection could be your insurance we're looking at, and the structure can provide asset protection. We're looking at the incorporation, and we're making a plan for savings, investment, and growing the wealth. I want everyone to make sure they're keeping an eye on your net worth, your personal income statement. I also want you to look at your debt and then look at your assets. Like, what are your assets? Also, when we start looking at your business, you want to look at some important numbers again: your cash sales, your expenses, your checking account, 25 to 40% of your monthly profits. So we want to just look at what's happening. You need to know your ratios, what's important in your industry. There are software tools that accountants use where we have benchmarks, benchmarks to show what is a great number and ratios that certain industries should have. So if I was looking at a dentist, I would know how much is good for profitability for that dentist. Like, how much does the average dentist spend on payroll, on rent, on marketing? So those are the type of numbers. They're called benchmarking numbers you need to ask your accountant about. So really want to just keep an eye on your finances, those particular numbers that I gave you, plus your business numbers. The same thing: how much operating income, how much in expenses, and then you want to know your assets. So as business owners, you may have assets as well: your equipment, your furniture and fixtures in your office. You may have a car in your business because you have business use. That's also an asset. So I want to give you a couple of tips, because I have 8 tips in my program that I ask everyone to track, but I want to give you a couple of the tips now. One of them would be set up a tax checking account. We talked about that you may have quarterly expenses. So I suggest setting up a separate account just for tax. So you set aside money for tax and you're staying current with those payments. That's the first tip. And my tip number 6 of the 8 that I have is have business and personal saving goals. So you really need to develop your goals so you can create the wealth you want. If you don't even know what you want and you don't have the goals, how are you going to accomplish that? So that is another important thing. You have your business and your personal, and some of the tools that I gave you and tips of numbers to track are going to help you stay on track of achieving those goals. Now, when we talk about the deductions and the goals, some of the things that you do want to look at is your home office expense, travel, meals, hiring children and grandparents. So these are some of the deductions that you would take in your business that can help you get more money in your pocket. You know, instead of paying out to the IRS, use these deductions so that you can keep more of that money in your pocket and then grow your wealth and invest. So home office, travel, meals, Right now, meals 100% deductible if you buy them from a restaurant. It's due to COVID and the restaurants being impacted. The IRS is allowing 100%. It was last year and this year if you buy from a restaurant. Hiring your children and your grandparents, or your grandparents can work, or your parents can work with you. That could be a deduction. So if you are supporting somebody that's in your family, see if there is something you can do to hire them. They may be a consultant that helps you. They could be on your advisory board. So that's a way that now you can deduct the money that you're paying them, and they're working instead of just supporting and not having a deduction for them. Maximize your depreciation. We talk about depreciation for the rental property, but also depreciation for your equipment that you buy in your company. That could be depreciated. Healthcare strategies. We talk about fringe benefit strategies, accountable plans, medical reimbursements, and home administrative office. So a lot of these deductions you can do in your business. You just need to be aware and plan ahead for it. Legal entity, we talked about that, like the sole proprietor, partnership, C Corp, S Corp, multi. You can have multi-consideration. You can have family office. That means that you have a business and your whole family is in that business and it's going to pass on to the next generation. There's great strategies regarding having family office. So we do talk about the legal entity review. That's a great way to build wealth. We're talking about, if you look at the Vanderbilts, they pass this money from one family member to another, and then they have it in a shared kind of company format. That's what we're talking about. We're talking about true wealth and building that type of wealth, and that can be done in family offices. Retirement review. So we definitely want to look at your retirement. All of these type of retirement plans you can do in your business. We just have to look to see which one is best for you, which one is going to maximize your deduction. And then that scale again, where you look at, okay, if I put back $80,000 a year, how much will that impact my life or savings? Asset protection considerations. So 50 state credit protection exemptions. So this is just a lot of information on what I look at. There's 50 different state credit protection exemptions, like homestead. In Texas, we have homestead. Some states like California, their property is not 100% exempt. So if somebody were to sue them, you could get to a person's house. We're in Texas and Florida, we're 100%. That's kind of why O.J. Simpson's, his house was protected. He had houses in Florida and they couldn't get to his home. So you need to know those rules about homestead exemption and what that means. Your life insurance policies, your Roth, all of this is a part of your wealth plan, because what are you going to leave to your estate and your family and your legacy? You actually need to understand all of these types of tools and investment protection ways so that you are protected, and how you want to leave your money to your family is protected. So that could be going into not a will, but an estate, because an estate is going to protect how it's allocated. A will may have to go through probate, and they could charge at least 6% of your assets just to the courts, and it may not go to who you want it to go to. So that's why it is important at a certain level to have asset protection as a part of your wealth strategy as well. Quarterly estimated payments, we talked about that, why it's important to do your quarterly and look at your numbers, not only so you can do your payments, but it gives you an idea to where you are and what you need to improve on each quarter. So these are some of the structures that I've utilized. So it's just, we got the asset protection, we have international corporation here, planning, schematics, series LLCs, which I've just read some new information about series LLCs, and government changed the rules. So now it's not as beneficial as it used to be. So just staying on top of those things are very important to understand. I've gone over a lot of information. Hopefully it's not too overwhelming. There's a lot of things to do. I know even for me, my estate plan, I need to complete mine. I've started it. So I know that this is a lot. I know that we're starting at different points, but the good news is it's never too late. As you gain more information, you can do more. So I just really want to encourage you to really just start today. Start with some of the basics that we've gone over. And if you are interested in other options, we have two options. The first, you can learn to grow your wealth and develop financial intelligence by joining. It's a 6-week wealth intelligence program. So it's 6 modules, and every week you have homework, you have things that you need to go over, and you have a Q&A with me every week. And you're going to develop your net worth. You're going to have budgeting. You're going to look at QuickBooks. We're going to look at your KPIs, like what do you need to track? We're going to make sure that we have a plan that you wanted. And then by the end of that 6 weeks, you're probably going to adjust that plan because you're going to feel so strong and feel like now you have the wealth intelligence to make different choices. So that 6-week course is one way to work with us. The second option is a little higher investment, but in exchange, we work directly with you to grow your wealth over a period of a year or longer. So that's the plan where I'm actually looking at your situation, developing, okay, you need a LLC, you need an S Corp. I'm going to look at your tax deductions. Okay, where are you missing? We may need to go back 3 years. So my investment, what I'm saying is an investment, could really be money in your pocket because I'm going to save you money. Plus, we may go back some years and get you some money because you have losses in some years and gains in others. So that's the second option, is a direct working with us through the tax advisory services. So that's the tax advisory services, what you get, help you keep your documents in place, your quarterly payments, tax deductions. And what I can say is that the tax deductions that you receive will always be more than what you're paying as the investment in the services. It's just always worked out like that, because if I can't help you, I'm going to tell you, you're not in a situation where I can help you at this point. So maybe you need the wealth intelligence course first to build more. So I'm going to be honest with you and say, yes, I can help you, or no, I can't. And so it's always where you're going to have more in your pocket from working with us than you've spent out. So my pledge to you is I'm not going to throw fancy accounting words when we're going through the wealth. I really want to get down and make it simple and make it so you understand and you are excited about working the lesson. It's, you know, I don't say I want to dumb down, but I don't want it to be confusing. You know, I know that I am an accountant and I may throw out some terms and you're like, I'm not familiar with that. Well, that's why I'm here for Q&A, and I want you to understand. So let me know, because I don't know if it's a word or if it's a term that's not familiar, like layman terms, because I'm just so used to being in that world of accounting and talking that language. So no question is ever something that you shouldn't ask, because I really like to help and really want to make sure everyone is living the dream and growing the wealth that they desire. So I just ask you at this time, are you ready? Are you ready for the growth? If so, you can just follow me on Instagram. I'm always giving information about that. I have a YouTube channel that's at CatrinaMCraft as well, that I have shorts twice a week. And they just talk about different topics: wealth, tax, real estate, crypto. And then Instagram, the same, just I have different posts that talk about wealth and business. And then if you're interested in the Wealth Intelligence Program, even if it's not now, if you think you may be interested in it later, just email me at hello@CatrinaMCraft, and in the subject put Wealth Intelligence. And I would love to just go on this journey with you. Thank you. That's all I have.